Now let's move on to the second part, the rules of bonded copper contract. The first question is, who is INE? As Mr. John mentioned before, INE is the subsidiary and international platform of Chevy. Now there are 3 products listed at INE: the crude oil futures, the TSR20 futures, and the low sulfur fuel oil futures. And in the future, besides bonded copper futures, we're also planning to launch crude oil options and freight index futures. So the bonded copper futures will be listed and traded on the basis of international platform, net pricing, bonded delivery, and RMB denomination. The international platform means it is open to overseas investors directly. Net pricing means the quotas are net of VAT, etc. The bonded delivery means all the delivery warehouses are bonded warehouses, and the physical delivery is applied. Finally, the contract is denominated in RMB, and foreign currencies such as US dollars can be used as margin. Since our contract and its appendix can be found on our official website, I just want to talk about the highlights of them. Number 1, the daily price limit is within 3% of the settlement price of the preceding trading day, and the minimum trading margin is 5% of the contract value. The product symbol is BC, which stands for bonded copper. The standard delivery unit is 25 metric tons, and the deliverable copper should be of a brand registered with INE or registered with Chevy and approved by INE, and should be accompanied by a certificate of quality. And you have to pay attention that the daily price and the trading margin prescribed in the contract are the minimum standards and are always not the parameters in practice. So we will make some circular or announcements next week so you can see the daily price limit and trading margin in practice. Next, we are talking about the similarities and differences between INE bonded copper and Chevy copper. The bonded copper futures is identical to Chevy copper futures in terms of contract size, price quotation units, minimum price fluctuation, delivery month, trading hours, last trading day, delivery units, and determination of final settlement price. However, there are 11 main differences between the 2 contracts. Number 1, the price of bonded copper is exclusive of tax and duty, while the price of Chevy copper is inclusive of tax and duty. Number 2, the deliverable grades of bonded copper is only grade A cathode, narrower than the deliverable grades of Chevy copper, but equivalent to that of LME and COMEX. And number 3, about the position limit. For bonded copper futures contract, in the regular months, threshold for position limit proportion is 70,000 lots. Position limits for the delivery month, the month prior to the delivery month, from the day of listing to the last trading day of the second month prior to the delivery month, are 700, 3,500, and 1,700 lots respectively. Comparatively, it is a bit larger in any periods of position limit in Chevy's copper futures. Let's move to the 4th column. A member, an OSP, or client whose general position in a futures contract reaches the general position limit set by INE, or an overseas intermediary whose general position in a futures contract reaches or exceeds 60% of its general position limit, shall take the initiative to report to INE. Comparatively, the rules for Chevy copper is a little bit stricter. And number 5, INE's bonded copper futures contract delivery commodities are all the registered brands with INE or registered brands with Chevy and allowed by INE. There is no premiums or discounts on brand. However, there are some brands, some registered brands with Chevy or still have premiums. Number 6, we have duty paid delivery and the bonded delivery in Chevy's copper contract, while we will only take bonded delivery in INE's bonded copper futures. And number 7, the delivery period is 5 consecutive business days after the last trading day for INE bonded copper, while there will be 3 consecutive trading days after the last trading day for Chevy copper. And the 8th column is about the market maker scheme. We will set up a market maker scheme on bonded copper contract rather than Chevy's contract. And the transaction fees for bonded copper will be announced soon. The symbol for INE copper is BC, and the symbol for Chevy is CU. The last but not least, the bonded copper futures have trader eligibility requirements, while there's no such requirements on Chevy's contract. Since our time is limited, next I will talk about the highlights of trading, settlement, and the delivery business. Firstly, the trading hour. A trading day starts at 9 p.m. of the previous trading day. The night session ends at 1 a.m. in the next day. The morning session starts from 9 a.m. to 11:30 a.m. with a 15-minute break between. The afternoon session starts from 1:30 p.m. to 3 p.m. It is exactly the same as the trading hours of Chevy's copper futures. The participation mode of bonded copper is the same as that of crude oil or TSR20. Domestic clients can trade through futures for a member, which we call FF members, and overseas clients can trade through FF members or through OSBPs and overseas intermediaries, and that's through FF members. This slide shows the participation mode for INE's product. Overseas clients have 4 ways to participate. The first one is open accounts through FF members. The second way is open accounts through overseas intermediaries. And third way is open accounts through overseas special brokerage participants, the OSBP. And the last way is directly trade as overseas special non-brokerage participants, the OSNBP. Now let's look at the eligibility requirements. Since bonded copper futures is available for global investors, according to CSRC's regulation, the investors must follow the eligibility rules. In general, investors must meet the criteria from the aspect of knowledge test, available funds, and trading experience. But if you have already traded in China's equity index futures, government bond futures, commodity options, PTA, you are exempted in some of the above criteria, but need to sign required applications at your brokerage agency. If you are INE's crude oil investors, you will automatically have bonded copper futures trading access. The different trading margins will apply to different trading periods. As of listing, the minimum trading margin is 5% of the contract value. As of the first trading day of the month before the delivery month, the minimum trading margin is 10%. As of the first trading day of the delivery month, the trading margin is 15%. And as of the second trading day before the last trading day, the trading margin is 20%. And we also have the position limit system. In different months, there are different position limits. For example, for clients, non-FF members, and all SMBPs, the position limit is 700 lots single counted in the first month before the delivery month. And the position limit is 3,500 lots from the day of listing to the last trading day of the second month before the delivery month. The position limit is 7,000 lots. However, if your production or consumption or trading scale position is larger than the position limit in the slide, you can apply for the hedging quote. The application procedure can be found in the hedging chapter of INE's trading rules. And the price limit rules of bonded copper is the same as Chevy's copper futures. We will have a certain formulation, just as you can see in the slide. Now from this page, let's move on the highlights of the settlements business. The overseas include as we can see in this slide, in INE rules, the overseas broker can be divided into OSBP and overseas intermediaries, and the overseas trader can be divided into OSMBP and overseas clients. Let's look at the settlement structure. The Chinese resident can only use RMB, and the non-residents can use offshore RMB, and they can use foreign currency as margin. All the settlements of overseas broker and overseas trader shall be done through FF members. As you have already know, the settlement, the pricing and the settlement currency is RMB, and onshore and offshore RMB, USD, standard warrant, etc. can be used as margin collaterals. To convert USD to RMB, CNY's central parity rate published by CFETs will be used, and there will be a 5% haircut. We're sure you can look up for more details by logging our website, www.ine.cn. We also provide the English version of all the settlement guidelines. For example, there is a foreign exchange conversion guideline for members. So since our time is limited, I will talk about the highlights of the delivery of bonded copper futures. Okay, the key points are as follows. We have physical delivery and bonded delivery and warehouse delivery on bonded copper futures. About the settlement price, the bonded final settlement price is equal to final settlement price, which is the benchmark price for the last trading day of the contract. And for EFP, which stands for exchange for physical, the EFP bonded final settlement price is equal to settlement price of the first nearby contract on the trading day before the EFP application day. And this slide shows the standard delivery procedures. There will be the 5 consecutive days of the last trading day. On the first delivery day, INE collects a warrant from seller and delivery intention from buyer. On day 2, INE assigns standard warrant to the buyer. On day 3, INE complete transfer of instruments. The buyer pays delivery payments and receives warrants before 2 p.m. The sellers receive delivery payment before 4 p.m. And day 4 and day 5, INE receives tax invoice from seller, unfreezes seller's margin, and issues tax invoice to buyer. After the standard warrant has been generated, it can be used as margin, used for physical delivery, pledged outside INE. When transferring standard warrants, it should be through the standard warrant management system and cleared through brokerage agencies and INE.